All right, hello boys and girls, how you doing out there? Welcome to Ready Set Live here with Ready Set Crypto. I'm Doc Severson coming to you from beautiful Greenville, South Carolina, and Mav off to my right, your left, is coming from the land of many, many fires. How is it going out there?
It's a bit smoky. No, it's okay where I'm at. But yeah, it's kind of crazy.
You know, it's easy to forget. You think, well, oh, half of Los Angeles is on fire, and then you realize how big the area is. I mean, your nearest fire is what, like 40 miles away or something?
Yeah, they're much to the north from me. But yeah, you can still like smell them in the wind. So it's definitely real.
Yeah, it's just apart from the normal barbecue here. All right, let's see. Who do we got out there? We have Chris coming in from the Gold Coast of Oz. Greetings from corrupt South Africa. I'm not going to touch that one. New York is in the house. Hey, Tony, how we doing out there? We got Akshay from India. We got Big Mike is moving to Malta. Mike, I'm not going to touch that one either, but it sounds pretty cool. Hey, Darius, hello from Germany. Great to see everybody on board. We got folks all around the world that are tuning in here today. So as they come in, we will transition over to the informational part of our webcast today. So the way, if you are just joining us live, or if, Lord forbid, you're watching us on a replay, then typically what we do is we got a couple of things that we've prepared for your entertainment, for your information, and then we will kind of transition over to the anarchy section of the program, which is where we take your questions, and is our favorite part. So even though you guys enjoy looking at Mav, I've got something to share with you guys here. So adios, Mav. We're going to go look at charts here for a minute. So, okay, so what's going on? Since we last talked, for those of you who hopefully caught my trade school on Friday, which was a lot of fun because we went over a lot of topics, and right near the end of it, somebody's like, dude, check the price chart. And we were getting the pump right then from the China news. So we've got ourselves a little pump. We've dug ourselves out of the hole down by 7,500. The price is up near 90, 91, 9,200 right now. What's going on? Where do we see ourselves framing this thing? So first of all, a lot of people wonder if this is real. Is this a real move? And yeah, the answer is yes, it is. However, to keep things in perspective, we always have to look at the larger time frame charts. And let me pick a different chart without a little bit less stuff in here. This is the weekly chart. The weekly chart is, this pump is just another lower high, right? So this is just another lower high. So let's not get too crazy in front of ourselves. Lower lows, lower highs. What we need to see is this needs to reverse with some kind of higher low and then a higher high combination to move into that acceleration that we hope that we're going to see. And I say this to the OMNIA members that are part of our service all the time, is that to go higher, you've got to go lower first. To go higher, you got to go lower first, because you need that short covering element. You're not going to get there alone on just supply and demand. You're not going to get there alone on just bulls saying, you know what, I think I'll buy today. It's not going to happen. You've got to get shorts scrambling to get out. And they got bent over backwards on Friday, and it was something to behold. Okay, so let's move on here. What else can we determine from the chart? All right, so that's the weekly chart. Let's go back to the daily. So I got a number of things that are on here. This ellipse or arc that's on here represents, as of a few minutes ago, the one standard deviation, plus minus one standard deviation, or we can say the 68% probability cone into the end of next month, which is almost this month. So 68.2% probability that the price is going to be within this cone between now and the 29th of November. That's based on the option chain. And if you don't know how I did that, check out Friday's trade school where I went over how to set these things up. So this is something that we do in the equity markets all the time. We set up trades based on probabilities, based on standard deviations. And there you go. There's a 68% probability the price is going to be within there. Can the price do whatever it wants to? Of course it can. Of course it can. But what we're doing is we're assigning probability instead of other people that are just tossing a dart at a board and saying, I think Bitcoin's going to be 100,000 by next year. Based on what? You have no idea. That's just sticking your wet finger up into the air. Okay, so that's one thing. Now the other thing to keep in mind, so that's the statistical side of the chart. I think it's also important to look at the technical side of the chart. All right, so let's clear this off of here. Let's kind of move things around. You'll notice that all these lines on the side here, this is the volume profile. So the volume profile has actually been fairly accurate to this point. Let's go ahead and reset the chart. Okay, so volume profile has been accurate for us, predicting support and resistance. And so what you'll see is that the price tends to bounce around inside of these high volume nodes. These are high volume nodes, the ones on the left here. And this represents a lot of trading activity to build a high volume node down here, down here. There's a huge one here. So we got a quick rip below that as it fell out of that, and then boom, it's right back inside of that. So this high volume node that it's in between right now is the range between 8,000 and 10,000. And it may stay there for a little while, so don't get impatient, but the price should stay within this range for quite some time until it's ready to go. Now, one thing that I'm looking at, well, I guess a number of things that I'm looking at, is how do we know, or where is this going to bounce and what's going to happen from here? Well, again, I don't know the answer to that, but what I can do is based on probabilities. If we draw the fibs, the fib retracements from the bottom of this move to the top, we can see that we've got some standard fib retracement areas. So right now the price is hanging around the 38.2, which is actually pretty strong. But I don't want it to break from here. I do not want it to break to the upside from here. I want it to go down a little further. I want to pull back that rubber band on the slingshot just a little further. And what I'm noticing is I've got a confluence here. I've got a confluence of not only the pivot resistance, that's pivot resistance, once former resistance, now new support. So that's right around 8,800. That's also coming in line with the 50% fib retracement, as well as the retest of this trend line, this descending trend line. And as we know, descending trend lines eventually break to the upside. So we've got three things of confluence right around this area here, which may set up my next trade, which would be a put sale, hopefully down here outside of the one standard deviation range. So if I can sell something down to maybe 7,500, 7,000 for November 29 on a sharp pullback that raises the implied volatility, then I've got a number of things working in my favor for that trade to work out. So that's just a couple of things I'm working at. If you guys are not looking at any kind of options, this might be a good place to maybe scale in, set up a limit order, look for that. So I would look for some kind of a bounce coming off of 8,800. If it falls through there, then what this means is that this is just another lower high on the weekly chart, and we've got a little bit more work in front of us before this chart is going to reverse. So quite honestly, there's nothing really else worth looking at here. Most of the other coins that we normally look at, like Ethereum, just kind of, it's stuck in a range. It's not doing much of anything. Bitcoin Cash has been okay lately. Litecoin just stuck in a range, not getting anything. Binance Coin has actually started to reverse off the downside, which is good. Monero stuck in a range. Ethereum Classic stuck in a range. For those of you in the Ripple army that are joining us today, here is Ripple versus the USD. And until it gets above 33 cents, no respect. No respect. It's got to get above 33 cents. Otherwise, I don't want to talk about it. It's not worth talking about. Okay, that's pretty much it. So as goes Bitcoin, so goes the rest of the market. We will continue to watch that one. So that is it for the the informational part of the show. Hello, I'm back. So if you guys have any questions on that, if at the end of this, if there's any other coins you guys want me to look at, but quite honestly, you can save yourself some trouble by just putting a weekly chart on your coin, and if it's moving to the downside, then I wouldn't look at it too much right now. Okay. So what is the volume indicator on the right, Doc? That is called volume profile. That's called volume profile. And if you guys are curious, I can show you how to bring that up later on. So just when we go into the Q&A section, just bring up that question if you want me to show you how to do that. So Mav, have you got anything? You were teasing me with some kind of content before.
I do. This is the part where I take over and bore everybody out of their minds. So
do it, man. I can't wait. That's awesome.
Buckle up, everybody. So, yeah, I think, you see the screen okay?
We can.
For those returning, our return viewers, I have reinstalled PowerPoint, so if this works, we'll be good. All right, cool. So, what oh man, I'm already off to a bad start. So, I was talking about what's going on in the markets, and one of the things I want to make very clear to people is we are in sort of a very there's a lot going on right now, and part of my feeling is that in a time of uncertainty, in a time of changing markets and changing perspectives in the world, you need to be financially independent as much as possible. What that means is that you're not dependent on money, you're not dependent on a job coming in. So to that end, there's some reasons why you need to pursue financial independence. There's a lot, but we just put out a class. It's around financial independence. It's 101 steps, and it goes through how to identify your debts and your expenses and how to start working towards turning those into investments and retirement plans. And this is something that is like a big passion of mine, because as well as it's great to be investing in cryptocurrency and championing, pursuing this new initiative, this new endeavor that is the crypto space, and hopefully profiting from it. At the same time, you need to take care of number one. You need to make sure that you're working from a stable ground, a stable foundation to make that happen. So that's what this class is all about. It's the biggest class we've ever made. It's 7 hours. It's taught between Doc and myself and Glenn, who is a financial advisor. And what we really try to do is just walk you through what you need to do in order to just get yourself to a place where you can stop worrying about money, stop being dependent on a job, because if you lost that job, what would you do? If you don't have a good answer to that question, maybe you should start thinking about at least putting some money away each month, working for, towards a more stable position, starting to be able to live off your investments. That's what financial independence is all about. So
do you think there's even going to be jobs in 5 to 10 years?
That's another good perspective of things. We're about to undergo the most disruptive period of human history, and part of that, you're right, is around jobs and what is a job and the nature of work. Man, we could go on for hours on that topic, but it's just important to me that you guys are okay, and care about you guys. And in the face of massive global geopolitical socioeconomic change, you got to be in a good spot. So that's what this class is all about. So if you want to join us, it's over at readystartcrypto.com/freedom. Of course, if you're part of our OMNIA group, it's included. The class is already live. It's already built. So you can go through all 101 steps today. I hope you join us. So what's going on? What's driving the market? Are we getting ready for a big wave, or are we going to see a pullback? This is all from the fundamental perspective. So one thing, or 7 things, I guess, to go through is what we've seen over the past week, and specifically around China. So here are 7 reasons why we're seeing lots of movement in the market with regard to China. The first is just, a market that is shooting higher, squeezing out the shorts. It's a self-fulfilling prophecy. You once there's a large move to the upside, it starts to build more momentum. And Doc was just kind of talking about that. Like it's a market that has been suppressed for a very long time. So like a compressed spring, it's ready to move. So any sort of catalyst that such as Xi Jinping making comments about blockchain and the need to adopt it, that's going to move the market. So yeah, obviously that's probably the most obvious thing I could say, but this is something that we've been waiting for some time. We've been saying over and over again that we're waiting for one of these flashpoints, this sort of inflection point where there is something that moves the market more than just the basic technicals. And we definitely saw that on October 25th when Xi Jinping chartered China to pursue blockchain technology. And yeah, so that's why we're seeing soaring investment in blockchain right now from China into Chinese blockchain technology and innovation. And this is definitely something that we're going to see more and more of. As I talked about in yesterday's video, this is good. Like there's no denying that as China pushes blockchain more, as they push the envelope more with blockchain and the larger space around distributed ledger technology, there's obviously going to be benefits globally from that. At the same time, we have to be cognizant of how they're doing it, what their intentions, their ulterior motives are. We'll get into that a little bit more, but basically, it's good for the overall space. At the same time, like we can't lose sight of what the space was founded on and what the larger tenets of distributed ledger technology are in terms of freedom, in terms of open finance and things of that sort. But anyways, China is in like going in on blockchain, and that's really cool to see. What we're also seeing is sort of more of a social renaissance as well. China is just really well positioned to embrace emerging fintech. I remember last year when I was in Shenzhen, I saw grandmas paying for produce at the farmers market with their smartphones using WeChat and QR codes. And I'm like, this is the future. Oh, wow, hitting things. Um, this is definitely the future because you go back here, and I talked about this in one of our newsletters last week. We just saw the one of the biggest cities in America, Philadelphia, adopt a new law that mandates that businesses have to accept cash because unfortunately there are people that are just left behind when we move to a cashless system. So we're definitely moving in different directions between US and China, and it's just both from a technological as well as a social perspective, and certainly an adoption of emerging technologies. Another thing we want to look at is the actual like social media aspect of it and how people are talking about these things. It's very clear, just looking through WeChat and Baidu and a lot of the other Chinese social media, that when Xi Jinping comes out and says this is a central tenet of what Chinese ideology is, pursuing blockchain is central to our core mission. There was the most downloaded app in China is this one around, it's like education, and it takes Xi Jinping's rhetoric, and it's all about like sort of indoctrination towards the Chinese communist ideals and things of that sort. But they also have like educational aspects as well. Anyways, the top course, right, or it was, I don't know if it still is, was around like blockchain and just very basic primer of what is blockchain, what are the benefits of that. For that to be the number one course on the number one app in China, that's pretty cool. So clearly there is the Chinese people are embracing blockchain and talking about it, and that has ripple effects in terms of adoption, in terms of innovation. We saw that in 2017. It starts to snowball. So that is a very, very important aspect, as much as a top-down government mandated position, to also see a bottom-up, people first a perspective of things. People are clamoring for a certain amount of change or innovation or adoption or whatever. That's also very important. What we're also seeing is China's move towards, the beginnings of, or we're about to see the launch of what I call the digital yuan. And I was told that I was pronouncing that wrong, but if you go on Google, that's how they tell you to pronounce it. So I'm going to just keep, being Guilo and pronouncing it wrong. But like, what this means is that we're going to see China start to implement a digital currency with blockchain technology. We don't know the extent of it just yet, but apparently they've been working on this for over a year now, and they're ready to go, basically. And I read in an article back in August that they're targeting November 11th because that's the biggest shopping holiday in China. Think of it like Black Friday. But I think they're also trying to time this in the sense of the larger context of how do we roll this out? How do we implement this with the social credit score and things of that sort? There's a lot of factors at play, but at the same time, it was very clear from their remarks that they intend to first build an alternative to the SWIFT system that dominates the globe right now, but is also highly inefficient and takes fees and things of that sort. But they also aim to be a power broker of the emerging economy of the new globalized world. That's why we see China making huge investments, even as their economy is slowing down, in the One Belt One Road initiative. They're heavily investing in Southeast Asia as well as Africa in terms of infrastructure because they're playing the long game. They want to be where people go to, where countries go to for capital, for they want to be the new reserve currency or the new facilitator of this new digital economy. So this is a very important perspective that I don't think it's hard to see the ends as we look here in 2019 where this will all go. But I think this is one of the most important aspects of what China is working towards right now. One other thing is that China's like ecosystem is also they're making blockchain part of even their government ideals. Uh, One scary aspect is that they're already starting to play with the idea of having government officials swear their allegiance using blockchain as sort of this tether of like, you said this at this time, sort of thing.
So,
It's
Mav, is there any way that blockchain and crypto could be used against their citizens? Is there any thought that they want to get into this for nefarious and control purposes,
I
like
mean,
with the social credit scores and
sure,
everything
sure.
else that they're doing?
Yeah. So the thing with the thing with China and what really it's about control and surveillance and the perception of control. I think what a lot of people misunderstand about things like the social credit score system is it's not just there to be Big Brother and mandate the ways of the Chinese Central Party, although that is a big part of it. It's also to uplift a massive middle class that just came out of being rural. There's been a massive uprising of China's middle class in the past couple decades. So they really are all about uh, making sure that people are. It's a behavioral thing as much as it is a control thing. So it really is trying to put the guidelines on how Chinese citizens operate and just how they stay in line with things. And yes, I think a big piece of that is the financial aspect. They're already working. This has already been in place for some time. These consumer scores where based on how good of a consumer you are, based on how good you are at paying off your bills, even if you leave the rental bike in the right place, that affects you the WeChat or Alipay. You have a consumer score with those, and you've basically indoctrinated the Chinese citizens to start being very attached to that. It's very different than how we think of the FICO credit score here in the U.S. Because it's a sense of pride for them. It's a social, um, you know, it's almost like a watch or something like that. It's something that they show off. So yeah, to take that to the next level, to start to look at the transactional ability of each consumer, and then start to dictate what they can and cannot purchase or how they spend their money. A big part of it is capital flight as well. Money leaving the country, but it really is just this perception of we control we're watching. So yeah, there's a lot to it. Another thing is that they just introduced their this new cryptography law, which I think kind of it was reported, or people are touting this. One thing to know is that it's more about commercial aspects rather than it's not about like cryptocurrencies or anything like that. But it's important. It's a step forward. It's something we're not seeing at this scale in the States. So the Chinese government, both from a legislative as well as just a societal push perspective, they're definitely all across the board pushing this forward. So that's really interesting to see, and where this goes. We've obviously seen time and time again. China expresses interest. China, bans Bitcoin. China wants to, explore blockchain technology. China shuts down exchanges. So we're doing this. China's done this 2 steps forward, 1.5 steps back kind of mentality for years now as it relates to blockchain, and the market has gone up and down as a result, and we've been here, done that. But I think this time is somewhat different because we're really seeing this play out as it relates to the larger context. It just isn't. It's not just about China. This is part of the U.S.-China trade war, as well as China trying to cement itself as a new superpower and as a new power broker of their region. This really is the new space race of our time, our generation, because fintech it holds so much power, it's so much potential. When you're really reshaping how the economy and the efficiencies and how people interact with money and the government, there's a lot to it. There's a lot of different ways that this could shake out. So China is very keen on pursuing this as far as they can. Thankfully, we're seeing some progress in the States. We just learned yesterday that the SEC has approved a settlement network that is essentially it's building the foundation, the building blocks of tokenization, digital assets, some of the STO stuff that I've talked about, and so we're not sitting on our hands here in the States, but we are definitely moving at a different pace with different intentions, and we're very distracted. I think that was very clear from Zuck's Libra testimony, like in front of Congress last week, is that they were just out there to murder him on a national stage around privacy and Facebook and things of that sort. They really weren't there to discuss Libra. There was some questions about Libra, sure, but like it was all about how can we show
Mr. Zuckerberg, I'm getting nasty calls to my office. How can you stop that?
Right, exactly. It was very superficial. It was all about who can get the best talking points, so that they get repeated on the news the most, because we're going into an election year, and that's all that matters. It doesn't matter about the larger aspects, implications of this technology, that if we don't keep up, we're going to be left behind, not just by China, but the rest of the world. So it was disappointing to see, for sure. But thankfully, we aren't sitting still. There's still progress being made, such as this. Another thing we've learned, this literally just dropped right before we went live, is that the CME is going to be doing Bitcoin options contracts. So that's really cool, because we also just learned as well that Bakkt is going to be doing Bitcoin options as well. This is something that we were talking about a couple months ago as it relates to sort of the future of the Bitcoin trading market and what you need to be paying attention to as the space becomes more professional and as we see more financial products introduced to the space. A big piece of that is options and other trading alternatives. And yeah, we're going to see these come out because we just saw Deribit is implementing some new KYC protocols. So unfortunately, that isn't
They're
the
going to ruin
standard.
our party, man.
Right, right. So it's going to be there's going to be some flux in that right now,
You know,
but
the thing that we have to keep in mind, like I think a lot of people got very excited about Backed when Backed came out with futures. But what you have to understand is that Backed is an exchange, right?
mhm.
And this is different in the US because exchanges operate differently from brokers. So just because an exchange exists doesn't mean that anybody can trade through it unless you're an institution. So the problem is like all the TD Ameritrades and the E-Trades and the Fidelities and all those guys have got to link into that exchange so that they can offer those products to their end customers, which they're doing very, very slowly. So the whole thing, the CME is the same thing, right? So just because the CME offers them doesn't mean that we're going to get access to it as retail customers until these online brokerages like start getting pressure and start saying, well, I guess, yeah, we got to offer them. We can make money selling them.
Yeah, it's I think when the market starts to change a little bit, as we start to see more and more uncertainty introduced into the stock market, there's going to be more of a push for some of these alternative ways to park some capital into an emerging asset class. So I look forward to that. But yeah, for right now, it is a little bit frustrating. Um, we also just saw a couple hours ago the Fed come out and say that they're going to cut interest rates, but we're hitting the pause button. There's that's what Jerome Powell is claiming, but yeah, this also has larger implications as it relates to just many different things. I don't need to boil the ocean on interest rates, but this is more of the same that we've been seeing for some time throughout this year, and this I think is going to push more people towards riskier assets. It's going to push more people towards looking at alternative asset classes. So ultimately, even though this is concerning, even though there's sort of this macro global shift towards negative interest rates or central bank race to the bottom, we still have Bitcoin and the rest of the crypto asset class at least emerging, trying to push people back towards something with some backing. It's definitely it's not a good time on like there's a lot of uncertainty, but hopefully this we'll see more of this play out next year. But um, this was another slide we covered just last week, right before things kicked off, and I got called out on this, so I want to make sure I address it because we, as you know, we went down to 7,500, and I said this was a buying opportunity between 8,200 and 6,200, and 75 is right in the middle. Uh, Guys, we can't adequately determine where the market's going to go, what's going to happen, what Xi Jinping is going to say. But we do know that like Bitcoin was pretty oversold at that point. We do know that there's a seasonality aspect to it as well. So there's a lot of reasons right now as to, even though the market is somewhat slowing down because we sort of lost that catalyst that we had going into the weekend. We're still in a really good position. Um, you have to remember that Bitcoin moves in waves. And even though we don't have the backed and the Libras and the ETFs pushing us anymore, maybe we're 6 months out from the halving, but what's ultimately driving us right now, even though we are seeing a little bit of drying up in volume, the larger trend is still intact. And I think what's important for us to remember is that this is still very early on, very much the early days of this space. And again, Bitcoin is gone through this over and over again. So it's a long ball game. um, Another thing is, this was a slide from last week. Another thing is just the global sort of trend right now towards, people are just unhappy with the circumstances afforded to them by their economy or the government, and so they're looking to they're looking for better representation. They're looking for better methods and means and systems to better represent them. So yeah, we're seeing lots of dissatisfaction worldwide. As we covered last week, this boils down to four principal reasons regarding inequality, corruption, political freedom, and larger climate change. People are just, they feel left behind. And I think they're starting to more and more express that. And I think one way they're looking to express that is by the currencies issued to them by their government, and the lack of people are coming to find out that their fiat currency is not backed by anything, and it can quickly go into hyperinflation or whatever. It can, there's nothing there. Once the central structures of the underlying securing institution go away, once there's any sort of break in that trust, that faith that it can continue to collect taxes and pay its debts, well, we clearly see that the system fall apart. And so, as more and more of these countries, as we see more and more of their currencies fail or become just Zimbabwe dollars, I think people are going to be looking more and more to a cross-border sort of solution that is not bound by these conventional laws as it relates to what defines a currency, and do we need to live in a state of being beholden to something that I didn't crash the market. It's not my fault that the dollar is now worth only a fifth of what it was 100 years ago. Should I continue to put up with that, or should I look for something that better represents my values and what I'm looking for in something where I put my money? So I think it's also clear that as this narrative plays out, Bitcoin and global protests and just this uncertainty in the market, they're all intertwined. This is going to be, I think, one of the, if not the driving narratives of 2020 and the years to come as relates to this space and the larger macro space, is that Bitcoin is more and more a vehicle of this sort of change, this revolution in terms of monetary policy, as well as how do we treat people? How do we build a system that is more egalitarian, that better represents people, that better serves people? Because if people are not able to facilitate basic financial services, what do you have? And I think people are more and more fed up with that. Another thing is that the United States, in its position right now, is not living up to its potential. As it has a problem with this emerging narrative of we're just going to maintain the status quo. We're not going to challenge ourselves to evolve and look towards emerging technologies, especially emerging fintech. We're okay sitting on our laurels, and that is a very dangerous position because you either innovate or you be disrupted. That is the law of nature. It's all well and good to want to cling to something that feels good, but at the same time, if you don't constantly look for what comes next, if you don't constantly stay on your toes, if you don't constantly think about tomorrow, then you will be run over. And unfortunately, we're seeing that play out, albeit at a very slow pace right now, with the United States and its position as the world's financial power broker. So yeah, this is definitely not something that's gonna. There's no transition that's gonna happen overnight, but we're clearly seeing the cracks showing and widening right now. So this was sort of just to finish up here. We need to understand, if Bitcoin's falling back to 9,000, is that the new support level? We also need to understand what is going to drive the market moving forward, because we can't become addicted to news from China or things like that. We need a diversified source of news, because otherwise we just funnel all of our hopes and dreams and expectations into one piece of news, be that the Chinese New Year or the Bitcoin ETF or backed, or we've been here, done that. It's imperative for us to look to the larger perspective of things keep that in mind as it relates to market moves. And yeah, I think we're still in a very good position. We're starting to move in the right direction, even if there's setbacks, even if ultimately I don't agree with why the market moved. We shouldn't be placing all of our faith in China to push blockchain forward. They have a very different interpretation of what blockchain is, what it stands for, and et cetera, versus what Satoshi wrote. But that's the nature of open source technology. It's up to the interpreter of what to do with it. So, anyways, yeah, we're it's a very interesting time. I'm very excited to see where we go from here. And yeah, I've talked to you guys' ear off. So thanks for sticking around.
I got to remember to turn my mic on. Apparently, I was causing a lot of chatter in the room here. So,
Oh no.
yeah, I didn't realize that that was happening. I've got the mic gated, but apparently, still typing is opening up the gate. So, well, I've got a couple of people asking about a couple of coins. So I'm going to throw over to there.
Cool.
And there we go. Okay, so the first one is Neo. So Neo obviously is a huge one just because of the Chinese comments. This is one of those native sons. And if you just look at this, move, you're going to go, oh my God, here we go, moonshot, moonshot. Okay, guys, this is where we need to have a little perspective of what's going on. So maybe this is lifting off for the ground, but again, let's look at the weekly chart. And this is one thing I'm telling you guys all the time is before you get involved in something, make sure you got a weekly uptrend. I want to see does it really matter if you get it down here or maybe just a little bit higher, compared to the potential of this thing in terms of, the overhead or supply? I would say wait until you get some type of a higher high, higher low in the weekly chart, which is going to look something like this. I want to see this break above here, put in a low, another high, show that change in polarity back up to an uptrend again, and then I'll look for the next dip to add to that position, right? But what is low can go lower, so that's the problem with a lot of moves here. And quite honestly, a lot of altcoins is like we get excited every time we see a pump, and then we just see lower highs and lower lows, and so you can just drive this thing into the ground unless you've got something that's actually heading to the upside. So even though this is a great start, this is obviously an awesome start. So let's reset this. Hey, that's great. If you had bought in here and if you'd sold out here, you'd have a 800% return or whatever it is. But that's not the way that things work. That's not realistic to think that you're going to catch these kind of things. I got another question from EOS. Somebody asking about EOS. And again, kind of the same thing. This is still in the doldrums. It's still on a weekly chart. We're still lower highs, lower lows. And, guys, there's a great quote by Paul Tudor Jones who said, losers average losers. And that's not meant to point a finger at anybody. It's just those that are used to losing money will average down and continue to average down. Average into something heading up. Average into an asset that's actually showing accumulation. Let the whales do the heavy lifting for you. It's not going to be retail that lifts something. It's going to be institutional accumulation that's going to lift things off the ground. So just go for a ride. Be patient. Wait for things to turn around into an asset that you want to get into.
Yes, someone made a comment about the Chinese projects, at least over the past week, have really crushed it. Neo, Ontology, Tron. And yeah, it should be pretty obvious what the catalyst is behind that. But I think the larger question is that sustainable? Are these projects that I should be seeking out to be a larger portion of my portfolio, especially as, if you're investing in altcoins right now, you're probably not doing it for the expectations of things turning around, tomorrow. it's going to be Bitcoin's market for the foreseeable future. Um, but once we start to see more new blood, more volatility, more volume for this space, once we start to see a lot more capital enter this space, it's going to look for alternative ways to store that capital, to appreciate that capital, because it's going to be the case that Bitcoin is going to be overbought. This is exactly what we saw in 2017. Lots of capital came into the space in Q3 and Q4, and then it said, "I want something different." Bitcoin has gone up. I want to move somewhere else. I want to start exploring some more speculative value, and that's exactly what altcoins represented. So we're definitely going to see that. As it relates to the Chinese projects, you need to understand that it's very unlikely that the Chinese central party is just going to come out and say, "Oh, we're going to build all of our blockchain off of Neo," or things like that. Um, that's not to say that they're not going to interface with them and help build things with them. But it's what's been the case for basically since China has been involved with cryptocurrency, or sorry, blockchain, is that they hate cryptocurrency. They like blockchain because they, just like the internet, they want to control the what people see and how people use it. So it's very important for any project that is interfacing with Chinese anything to have that perspective. So it's probably overall China and FinTech, big FinTech, is crushing it right now. It's a very hot market. I've been talking a little bit in our Omnia newsletter about Chinese startups and the larger big FinTech space of China, and how like it's just you've even got Tencent, the Tencent Bank, or no, sorry, WeBank, has a $30 billion valuation, having just started a couple of years ago, which in comparison to something like Deutsche Bank, which only has 15, it's ridiculous. So there's a lot of new money involved, and it's just going to continue to be that way.
I got a question here about from Tony. Tony is asking, can I chart Nexus to BTC? Sure. Let me throw this over here real quick. So this is something that I want to show you guys, because this is always, somebody's going to look at this and say, oh, look at this, there's a weekly trend. No, that's not a weekly trend yet. That is just a weekly swing up. Look at the average weekly swings. So before I would, I mean, it's a great start. This is an awesome start. I mean, if you look at the daily chart on this guy, you're going to say, my God, look at it go. It's like time's a wasting. But keep things in perspective. This is why I want you guys to use more than one time frame. Is like, okay, this is a great start, but what I definitely want to see is, I probably want to see it get above like 5,500 sats, and then put in a strong higher low to do that. A definite. Okay, so let me just draw this up here. So I want to see this thing get above about this level and do something like that. Again, does it really matter whether you get in down here, or whether maybe it's a slightly delayed entry, slightly higher from that? I would just be very cautious right now, because you've got such strong downtrends and everything. Guys, there is no medal that you're going to get for getting the very bottom tick of the market. I would rather get onto something that's much more established trend than trying to pick the bottom. Picking the bottom is very, very difficult to do.
Yeah, one other perspective, just because China seems to be the thing that is driving some interest right now. One other perspective about big fintech in general is when it comes to retooling a lot of these massive financial institutions. It's a very complicated process. They have a lot of archaic technology and processes. The Swift network is 46 years old. A lot of these big banks are still working off of technology from the 90s, whereas a lot of what is being built in China right now and launched, it's brand new. So they're able to move a lot faster. They're able to utilize new technologies a lot easier. So it really is. There's just a fundamental difference in terms of the engines being utilized by these different massive financial institutions and technology companies. So that's I think a big piece of it that sort of gets lost. So as it relates to cryptocurrencies, they're just better able to interface with a lot of the emerging markets, the emerging technology of places like China versus the old school, just very archaic ways of doing things and the technologies in place that we see in places like the States. So yeah, that's going to require a massive tidal shift in terms of thinking and innovation, because unfortunately disruption can happen out very fast, but it also can happen very slow. So yeah, it's kind of interesting to see. Let's just take a couple more questions here, and then we'll drop off because we're starting to get a little bit long in the tooth.
We are getting a little long in the tooth. The comments are starting to get salty, which is usually it's usually the clue to wrap things up. So Crypto Darthmark is asking about selling a call at 10K. That's fine, you can do that, but never under any circumstances should you ever sell a naked call. A naked call is one where you're not covered by the underlying itself. So Eamon is saying, Doc, I don't think altcoins behave like this. They don't make sustainable long-term trends. They tend to have massive spikes in a very short time, then bleed for a very, very long time. That is true. There's this whack-a-mole kind of syndrome that goes around, especially with, if there's only maybe one or two coins that are actually making sustainable uptrends, then unless it's 2017 again, which it's not, then altcoins tend to go up, get pumped, and then just get smashed back down again. And this is why, guys, I'm saying wait until you get a weekly uptrend of sustained higher highs and higher lows. There's plenty of time. If these things have been sold down so far that there's plenty of opportunity to the upside if and when they decide to get accumulation again. So just be cautious for that. Just be patient. Wait for the trade to come to you.
Yeah, and it's also a good perspective to see how diversification can, even if you were in the top, an index of the top 20 altcoins right now, including Bitcoin, you still be up about 70 to 80% for the year, especially after this recent rally. And so, it is important, but at the same time, had you just gone into Bitcoin, you'd be up over 100% right now. And yeah, obviously hindsight's 2020. The opportunity cost of diversifying into altcoins, I'm very well aware of it. But at the same time, there's these assets are already down 95% from their high. Talking about the smaller altcoins, outside the top 20, and so the buying opportunity is constantly there. But what is the opportunity cost of holding on to them in a market that's continuing to just drive itself into the dirt or just go sideways? I'd rather trade assets that are moving higher, and then when the tide starts to shift, then I can repurpose that capital into clearly undervalued assets that have ability for upside potential. So that's just been the trading strategy we've been employing for the last year, because nothing else is going to really work until the market starts to shift in the other direction. So anyways.
Okay, so now we're getting BitConnect. Yeah,
BitConnect and Craig Wright. It's time to cut it off.
Time to go. Thanks, everybody. Appreciate you hanging out with us. This will be up on replay like real soon. You guys take care now.
Cheers, guys.